Have you ever been hit by a massive tax bill and you're like, how do I avoid this? Well, that's what happened last year. I got hit by a massive tax bill and now I'm on a mission to figure out what's the best way to minimize my taxes. What can I do to invest more tax advantageous way and use that to build my passive income and wealth. Hi friends, my name is Fahad Khan and welcome to my YouTube channel. On this channel, I share my experiences with real estate investing, personal finance, and entrepreneurship. And today we're going to talk about the TFSA, or the tax-free savings account. I really think that it's one of the most underrated accounts out there. I'll share some of the things that I'm doing with it and why I think it's so great, but really most people aren't using it to its full potential. In this video, I'll go through what the account is, what the benefits are, the drawbacks, how to actually open one, and some of the common mistakes when it comes to having a TFSA. You might be thinking, this is a savings account. I'm not putting money in there to invest. I'm gonna be lucky if I get 1%. So you're talking about investing in this account? Correct. And that's what 43% of Canadians that were polled thought as well. That a TFSA can't be used to generate more income. It's just a savings account. But that's where they're all wrong. The name can be quite misleading. It's not just a place to store your savings. You want to think of it like a basket, that the TFSA is that basket rather than the investment itself. So where the majority of people are just putting money into the account, to really take advantage of this account, of the TFSA, what you want to do is take your money, put it into the account, and then use that to invest. One of my favorite things to invest in is ETFs. So imagine investing in ETFs within a TFSA. You're really going to be compounding your wealth because of that tax-free aspect. I'll go into more of that later. And so for example, you create the account, you open it, you put money into it, and then what you want to do is go out and buy some shares. So let's say you've got $1,000, you deposit it and go buy something like an ETF. That's one of my favorite things to do. So the benefits of a TFSA. There are three main benefits that make a TFSA so great. The first one is that you don't pay any taxes on the gains that are made within the account. So let's say you've opened up your account, you've invested, let's say $10,000. Now over the next couple of years, that $10,000 grows and grows and becomes $20,000. Now when you decide to withdraw that $20,000, you don't pay any taxes. So you're not paying taxes while it's in the account, and you're not paying taxes when you withdraw it either. So you've basically made profit without having to pay any taxes. If you're enjoying this video, please like and subscribe. It really helps the channel out and it keeps you updated and lets you know as soon as the next video is out. The second benefit of a TFSA is that you can withdraw money at any time without any penalties. For example, let's say you want to take money out, you can go ahead and do so. Versus other accounts, if you take money out early, especially let's say an RRSP, you usually have to pay penalties. And for that reason, I find the TFSA to be very versatile. You can put money in even if it's for a short term, let's say for a few years if you're saving up for a house, or for a longer term if you're using it to replace your income eventually as an investment or retirement. It's very versatile. And the third benefit is there's no minimums. So again, if you've got a TFSA, you put money in, let's say even if it's $1, you can take out $1 if you want, versus other accounts. Again, I'm comparing it to an RRSP, where generally there's a formula of what the minimum has to be that you take out. And again, you can't usually access that until you retire. Okay, so there's definitely lots of benefits to a TFSA that are advantageous, but there's got to be some drawbacks, right? Well, there are. Let's go into them. So the first drawback of a TFSA, and this is going to be the main drawback, is that there's a maximum amount of money that you can put into a TFSA every year. That amount's set by the government at the beginning of the year, and then it's set in place. Now this makes sense because the TFSA was originally launched many years ago to encourage people to save more. So they put a certain amount that you could invest into it without paying taxes. That's how they incentivized you. Now they don't want to get rid of all their investment income. Otherwise, if you're selling stocks and you're not paying taxes on it, the government's going to lose a lot of money, so they had to cap it. Last year and for the past few years, the maximum has been $6,000 that you can put into it. Before that, it was ranged between $5,000 and $5,500, and there was actually one year that it went up to $10,000. That year, the government got a lot of flack for, and so the very next year they brought it back down. And so you're thinking, okay, 5,000, 6,000, that's not really a lot of money to put into this account for retirement. It's not really going to make a big impact. But in fact, only 1 in 10 Canadians actually hit that maximum contribution limit for a TFSA. And so there's a few reasons for that. One is people aren't fully aware of all the benefits and advantages of a TFSA. One of the reasons why people don't hit that limit is because they have different priorities. So for example, if you're not familiar with a TFSA, you might think, okay, I'm going to be putting all my money into an RRSP anyways, and whatever remainder amount I have, I'll put into the TFSA. And there's nothing wrong with that. Depending on your individual goals, you might say, okay, TFSA is my number one priority. If I have money left over, I'm going to put it in an RSP and then an RESP or some other account. Or maybe your priorities are different and you're going to be going in a different order, and that's okay. And that's why personal finance is so personal. And another thing to keep in mind with these contribution limits is that they're cumulative. So it's not like, let's say last year the limit was 6,000. If I only put in 1,000, that 5,000 isn't lost forever. It carries forward, and so I can contribute more in the current year. So you'll have that opportunity to continue investing in it down the road as well. Now, obviously you want to invest as soon as you can to take advantage of that compounding, but sometimes things change and you have different priorities, and that's okay. All right, so the second drawback of a TFSA, and this one's more specific to my personal situation, is that you can't sell naked puts within a TFSA. This is a common options trading strategy that I use, and it's actually one of the reasons that resulted in that big tax bill for me. And one of the reasons is because you have to do it in a personal account. You can't really do option trading within a registered account. Now, except for one way, there is one way that you can do it within a TFSA, and that's called selling covered calls. I won't go into detail on what a covered call is, that's for another video, but I'm really excited for it. Now, the only thing is I can't do it yet because you need to have a minimum of 100 shares of that one stock. So let's say, for example, if you want to do a covered call on Apple, you need 100 shares of Apple within your TFSA before you can do those covered calls. So if you're buying a lot of different stocks, it might take a while to get to that 100. I'm focusing just on ETFs, so hopefully I get there faster. But again, I'm not there yet. When I am, I'll let you know. I'll make a video on it on how it's going. But I'm really excited for that. Okay, so how do you actually open up a TFSA? So the first way, which is the most common way, and I think one of the reasons why people get confused between a TFSA and a high yield interest, between a TFSA and a high yield savings account, is because when you go to the bank and you tell them you want to open up a TFSA, they often combine it with a high interest savings account. So you open up a TFSA and they'll be like, oh, put money into it and you'll make X%, which seems much better than a regular savings account. But by using it just as a savings account, you're not maximizing the potential of that TFSA. And I also find that banks are full of fees, so it's harder to really use it to put investments in, especially when it's from a bank. No hard feelings to the banks out there, hopefully. You're great. Keep lending us money. The second route that you can go down to open up a TFSA is through a brokerage account. So for example, Wealthsimple, Interactive Brokers, or Questrade, one of those, and there's many more. I personally use Interactive Brokers because that's where my personal non-registered accounts are held as well. I like all the tools that it offers. I think it might be a little bit more complicated for someone who's just getting started, but for me, I love it. But one that I think is super underrated and that I recommend to all my friends and family, especially when they're getting started in investing or trading, is Wealthsimple. Wealthsimple isn't paying me to say this, though I think I should get them as a sponsor. What do you guys think? Wealthsimple is great for beginners because the user interface is great and it's super easy to use, easy to understand. And so regardless of what brokerage you're with, what you want to do is you'd go in and be like, hey, I'm opening up a new account. And usually they'll give you a few options. They'll be like personal, RRSP, some other registered accounts, and then TFSA will be there as well. And that's the one you want to select, TFSA. Once you've opened up that account, then you want to deposit your money in, and then it'll show up as a positive balance. Now, usually with a brokerage, you're barely going to get any interest. Usually it's very little. So don't use it as a high interest savings account. Make sure that you're investing that money. So your balance shows up. Let's say you've got 1,000 or 10,000, you put it in. And now go buy something, whether it's shares of Apple or an ETF like the SPY or the NASDAQ. That's what you want to go buy shares of. If you're getting dividends, you can get those dividends. Oftentimes they'll be tax-free. Now, if you do purchase a US stock, the IRS does keep 15% for withholding taxes. So it's still better than having it in a non-registered account. So you receive that dividend and you can reinvest it and buy more shares. Okay, so now you've got your TFSA open. What are some of the common mistakes that people go through? One of the common mistakes that people go through is over contributing. And usually the way this happens is if they have multiple accounts. So let's say you open up a tax-free savings account thinking it's just a high yield, high interest savings account with a bank. You're putting money in, but at the same time you've got something in Wealth Simple and you're putting money in there. So before you know it, you might lose track and you've over contributed. Now, if you do over contribute and you're above your cumulative contribution room, you will get penalized. I think you get taxed at like 1% per month, which can eat up into your returns really quickly. So you want to make sure you're not doing that. The second common mistake that people make is they'll open up a TFSA but not actually invest in anything. They'll put cash in and just leave it. That's the biggest mistake because you're missing out on that opportunity to let your wealth compound. So when you open it up, make sure you're investing in something. Another common mistake is people not investing in stocks outside of Canada. So because of that 15% withholding fee for dividends, people will not invest. But that's a mistake. That's a small amount of taxes and much better than having it in a personal account. Let me know in the comments below if you're using a TFSA as one of your primary investments. I'd love to learn more about how you're using it, and if you're not, why aren't you using it? Let me know in the comments below, and if you haven't yet liked or subscribed the video, please do so, and I'll see you next week.